The reason why people don't move is because they don't hurt bad enough. You know, if you sleep, your body will naturally roll over once your arm falls asleep. You lean on that stove, your body will, you don't got to think about it. It's going to jump when that crap get hot. A lot of y'all still lean on that stove because it just ain't that hot yet.
The real secret of success is you say you want something, tomorrow wake up and do something towards that.
He said you're not really making $1 million off of just collecting the rents from every single person. He said the money, the cash flow from each, he said the refi, the construction management, GC fee, acquisition fee.
You're the quarterback. You're the one that's the visionary that's going to help take it from beginning all the way to the end, leased up, rent it. So you might get 10 to 15% of a $20 million project. You know, you're talking about $1 million developer fees, $2 million developer fees, but then you also want to make money off of the construction. A lot of players will make money off of the construction, extra 300, 500, 600 there. Then people will take and make money off the property management. So in affordable housing, it's a little bit different. Like, it's a volume game.
A lot of people think affordable housing, they automatically think Section 8. That's the first thing that comes to mind. I want you to touch on, one, what made you even switch into that affordable housing lane from 20 years ago, you just doing construction and, you know, buying houses the regular way. What made you switch into the affordable housing thing?
Yeah, so first thing, affordable housing is way more than Section 8, right?
Yeah, everybody thinks it's just Section 8.
Everybody, when they say affordable housing.
Full disclosure, I thought it was just Section 8 too and two. Until I met him, I thought he blew my mind too. I thought it was just Section 8.
People are like, oh, you do affordable housing? I'm an affordable housing developer. Oh, I do Section 8 too. I'm like, yeah, that's great. But that's one of 25 to 30 programs at any given time that's a part of affordable housing.
Basically, how you buy a house and do a whole project, no money out of pocket. It was like you get the house for $1, a nominal fee $1,000. And you bring in a lender to fund based off the value that as is. Can you explain that?
Especially because it's affordable housing. They like to be involved in stuff like that. A lot of them like to get behind those programs, those projects, right?
I didn't know that.
And because there's something called CRA, Community Reinvestment Act. Big banks play this game all the time. There's like a law that started in like 1979. It's a Community Reinvestment Act where banks get scored by how much investment they make into disadvantaged communities.
You do the affordable housing and you in Philadelphia, but is affordable housing in other states, other 49 states?
Affordable housing can be done anywhere. And so
I know somebody asking that, thinking like, damn, I'm in Chicago. Can I do this out here?
So I'm in Philly. So in Philly, we got a pretty unique model that we're doing. It's a turn the key program where we're working with the city building.
Turn the key.
Turn the key. So we're working with the city. We're acquiring land for nominal fees. We're building and constructing new construction projects. We getting help from the banks, low interest loans to be able to make these deals work. People paying 12 to 14%. We paying 5 to 7%. Selling the homes for $280,000.
That's the max.
But these homes are worth $350,000, $370,000. Now I know a lot of people are sitting here right now saying $280,000. That's not affordable. But wait. So what happens? The government steps in and gives $75,000 of forgivable debt. It's a second position mortgage that you don't have to pay any interest on. They get a buyer $75,000, so now that $280 becomes $205.
Yo, listen, I can't make this stuff up. I'm literally at the closing. I don't get shocked by too many things. I'm at the closing, and we do what we had to do. And I get there and I'm just, let me look at this sheet. The crap said $1 on two separate sheets. Like he bought two houses for $1. And then I remember But the craziest part though, hold up. Those two houses that we got for $2, one of them was worth as is, was worth like $120,000. Damn.
The other one as is was worth like $130,000. A contract in my car right now for 10 houses and I'm getting 10 pieces of land that I'm getting for $10,000, $1,000 a piece. The total value of that land is $600,000. I'm paying $10K
for the land before the
development. I got the contract sitting on my backseat of my car right now. I'm paying $10,000.
You know he getting too many dollars in the backseat. All right, welcome back to the Funded and Closed podcast. I'm your host, Derek Boone, and I'm excited that you guys are watching this podcast for a couple reasons. One, because it was me years ago that watched podcasts that literally just opened my mind up and just really helped me go ahead and get the ball started. But also, I really enjoy recording these and doing this podcast because I understand that it's one piece of information, one play, or just one person that you start following, start getting connected with that can change your entire life, change the whole dynamic of your future just from as simple as a podcast. And also what I realized that a lot of us don't have multi-million-dollar people in our phone books right now, in our contacts, in our Rolodex. So now you get a chance to meet my multi-million-dollar friends, follow them, tap in with them, send them messages, send them DMs, whatever, tap into what they have going on there. You're getting my contacts and they're your contacts now. So the Funded and Closed podcast, I love it. And hopefully you guys are loving it as well. Today, I'm super excited. As you guys know, I'm always excited about my guests because I don't bring on anybody here that I personally haven't done business with. We already friends. We already hang out. We done deals, whatever the case may be is. And this is like what I'm just saying, if not to the highest level, this is somebody that I consider like a mentor and a friend-tor. Literally this guy's on another level. Like this is not paid promo. This is real life. This guy is literally developing communities. And when I say developing communities, some people say like we developing communities because it sound cool. No, like literally developing communities from an aspect of I'm actually caring about the community. Construction, he knows, like when people talk that construction stuff, they just talking about this guy really knows his construction stuff on a whole nother level, knowing his numbers. He's the first person I've actually seen with my own eyes, like went to closing in the HUD. For y'all don't know, that's like a real estate receipt. He said he purchased the house for $1, and I seen him do it more than one time. Like I'm talking about, the list goes on and on and on. But the biggest thing that I really want to say is like, this guy actually cares about the community. He's not buying just to flip to make a quick buck. He's trying to buy, rejuvenate the community, make money at the same time. Like this is a business at the end of the day, but also trying to how he can kill two birds with one stone. So I want y'all to make sure y'all understand it. You're about to hear from somebody, and we're about to have a conversation with somebody that is on a high level and not a 1 or 2 year run. I'm talking about a high level for years before I even got started in real estate. So I want to introduce my friend-tor, my good friend, a great brother, my guy, Jordan Ferrarini. What's up, bro?
Not much. What's up, brother?
Man,
thank you for having me. I appreciate the intro.
No, for sure, man.
I definitely look forward to, sharing some information, helping people get in this game, grow in this game, change things in this game. So let's get it.
Let's get it. Yo, so as you already know, I'll give you flowers, but I really want to personally just say, like, bro, you different. Like, you really know your stuff. And like a lot of people know stuff, but you really know your stuff. Like it's sometimes I ask you a question or you really break this thing down like on some trigonometry, like you really breaking it down. Like, no, you got to make sure this boom, 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 boom. But then break it down like a fifth grader can understand. So it's like, some people like for example, right? Full disclosure, I'm in the middle of trying to close this deal. Well, get this deal signed. The seller said they want to sell me the house. I said, let me get right back. I just saw the house before we started this podcast. And I said, let me just make sure, because I'm a guy, if I say I'm going to do it, I'm going to do it. So I don't want to say, I'm going to buy the house and I got to renege. I said, give me 2 hours. I got a busy day and I'm going to come back to check my numbers. I said, yo, what do you think about this? You went and zoomed it. Oh, but on that block is this, but this 100 is this 100. I'm like, damn, we on the block right now? He really visualized the whole area, told me the numbers. I sold a house over here for this price. I refinanced the house on this price, literally dropping receipts. I'm like, yeah, this dude really be doing this stuff. Like, it's official, and it's hard to find people that's not only talking about it on a high level, but also doing it on a high level as well recently, not 5 years ago. I'm talking about as of yesterday and this morning, still consistently doing this. So definitely that's rare, bro. That's
I appreciate it. But I think it's important to note though, just because I don't want anybody to think it's like this unique thing. Like they can't know things to a high level too, or be able to get to a high level too. So I always think it's really just important to just state like, it wasn't always that way, right? Like for so many of us, it wasn't always that way. 15 years ago, 20 years ago, when I got into the business, it was just doing things from the muscle. Like it wasn't any type of college degree or any type of fancy dad or grandfather that taught me the game. Like it was like my little brother, my mom, myself, my siblings. We took a business out of the trunk of a car with a bucket full of tools from the pawn shop. My little brother was a hustler on it. My mother was a hustler on it. I had just came home. It wasn't like I came home from college. I was coming home from, being inside of places from making mistakes. And I just said to myself, like, there's a lot of opportunity in construction. I watch how it started to create opportunity for my family. Watch how it was able to help my mom not have to, get her house foreclosed on. Watch how I was able to help my little brother, shout out to my little brother, Matt, he was a CD student getting all the girls. He was mad cool, like he was going to college,
Right.
but like construction, changed the game for him, put him in a spot to elevate. And it did the same thing for me. Like it took me from being in the streets, gave me something to focus that energy. I was hustling and doing business in the wrong way. It gave me something to focus my energy on into the right way. And I just became a student of it. So like anybody that's out there, like when you become a student of your craft and you commit to just putting everything you got into it, it don't matter what you've been through. If you're willing to study it, research it, read on it. I was up 10, 12 o'clock at night, Googling, showing up the next day for an event, for a meeting, talking to people, every single piece of information I can get, every class, every training I can get. I went to school for carpentry. I went to school for electric. I went to school for construction management. I read every book, and like each training, each class, whether it was a 1-day class or 6-month class or a 12-month class, it was like a stepping stone. You know what I mean? And so it didn't matter where I was starting, but I kept on building up all those stepping stones. Eventually I got to a point to where all these awards, all these accolades, been on all these stages, been all around the country, rubbing shoulders with billionaires, multimillionaires in the construction and real estate space. But it's important to just note that it didn't start off that way. And like, no matter where you are in your journey, like if you commit to it and show up each and every day and go hard on it, like you could get where I am, get where Boone is, even higher. So like, a lot of this is just making sure that we remind the people and we inspire the people in that too.
I think people underestimate how powerful one good year of undivided, like just straight focus. I remember December 2016, I was making $10 an hour at a retirement home and just working as many shifts as I could, whatever shift they had open. In December 2017, I sold 20-some houses. Like, got my realtor license, got licensed March 2017. I sold my first house April 2017. By the time December, I sold 20-some houses, quit that job. Like, people underestimate, that was a year of no music, no TV, no nothing. Like, strictly, if it ain't had nothing to do with houses, I ain't got nothing for it. I'm talking about no nothing, to the point where I was in a relationship. She told me, like, yo, listen, you breathing, eating, sleeping this. You forgot that I'm in a house because you just focus on this. Like, we got to go on a date or something. But that's how I locked in, and I don't regret nothing because, now we're in a position where we can move a little more freely, and it's like deals come to you, different things like that. But I just want to piggyback what you said. Like, your life can change if you just give it some focus and really make the decision. Somebody told me this before, like, the reason why people don't move is because it don't hurt bad enough. If you sleep, your body will naturally roll over once your arm falls asleep. You lean on that stove, your body you don't got to think about it. It's going to jump when that crap get hot. A lot of y'all still lean on that stove because it just ain't that hot yet. Yeah. You know what I mean? It's still it's just warm. Hey, look, listen, this job ain't that bad. This neighborhood not that bad. This relationship not that bad. This paycheck still paid up. It's not that bad. When that crap is like, hold on, you about to be evicted. All right, we got to do something. Yeah, when this relationship that bad, we got to do something. Things, you know what I'm saying?
Yeah, if you really want it, man, you could tell. When somebody really wants it, you can tell. Like, by the action. When somebody really wants something, it's no more rap, it's no more big conversations, those feel-good conversations, these big ideas. It's like, when you see them, their head is in the book.
Yeah, you could tell. Like,
you know what I mean? When you see them, they head is on their grind. Like, when you don't see them, because half the time they're not there, what they doing, they out working on that thing that they said that they wanted. And like, that's the biggest thing that separates people from getting to where they go and where they say they want to go. You know what I mean? Because the secret to success is not this big secret. The real secret of success is you say you want something, tomorrow wake up and do something towards that. And then the next day do something towards that. And the next day after that. And eventually you're going to start to get that momentum. But if you really want it, and you're going to have some up days, down days, but if you really want it and you stick with it, 30 days in a row, you're going to see gains. 6 months in a row, way more gains. 3 years in a row, 5 years in a row, 10 years in a row. And it all manifests. But like, you gotta start with that, sticking to what you say, and you gotta do it day after day after day until you get there.
No, for sure. So I want to get right into it. I got a question that I want to ask you. So you nationally awarded, building houses. You know, got a bunch of units, flipped a bunch of houses, done a lot of affordable housing, which we want to get into. But I heard you talk a lot about, or mention a couple of times in reference to the word construction, and that helped you get started. I personally, I want to share my thoughts on it. I want to hear about your thoughts on, should someone that's just getting started in real estate tap into the construction space or take their time to learn more about construction? My thoughts is everybody should know some general level of construction. I'm not saying you need to be a licensed GC or, a master plumber, master electrician, but you need to understand some level of construction, because I literally know some developers that don't know the difference between a Phillips or a flathead screwdriver. They don't know anything. Yes, they make money, do different things, but for case in point, my one friend, he asked me to come check out his project. It's like a ranch house. He about to flip, make $100,000 or whatever. And he was like, yeah, I'm about to make like 90 on this. I'm like, dope. I said, well, how much is your budget? He said like 100. I'm like, I said, bro, this house is small. And I said, what the before the pictures look like? He showed me. I'm like, bro, it didn't look too much different. He said, well, the GC told me 100, so I'm making 100. So, I mean, it's cool. I'm like, I'm not saying that you making 100 not a lot of money, but you probably can make 150. He getting you. And he like, I mean, but I'm still making money, so it don't matter. I'm like, look, what I'm gonna tell you is you need to take your time to learn something, because he don't know nothing. He just know how to find houses and sell them. Take a little bit of time to learn at least the foundation of construction, so you can tell him next time, this ain't gonna cost $100,000 for you to do a kitchen and bathroom. That's essentially, he did kitchen, bathrooms, and floors. That's essentially what he did and charged him $100,000.
Yeah, I mean, what I always tell people with construction is, when it comes to real estate, you find a deal, cool, you could win there. Fund the deal, cool, you win there. Get to the closing table, take your picture, you winning. And then get your head blown off on construction, right? We call it losing your shirt. Like, you did everything right, and then get to construction, either the budget wasn't enough, or the cost went way over, or the quality wasn't there. You had to do it all again.
Yo, I know you're enjoying this episode. I know you're getting a lot of game and a lot of value, a lot of information. But is it okay for me to give you even more value? Is it okay for me to give you more information? So if you just said yes, what I want to do is I want to give you access to a free training that I'm having, 100% free. You can log in. If you don't like, you can log off. It's 100% free. In this training, I'm going to show you guys the 4 steps that I utilize to be able to buy properties, rent properties, make money on property. Like this building we're in right now is 100% mine. And we do that. And I have done that doing those 4 simple steps. So what I want you guys to do is go to fundedandclosed.com, just like the podcast, but fundedandclosed.com. You're going to be able to register for the free training. Like I said, 100% free. And it's going to give you those 4 steps that I utilize to build my real estate empire. And you can do this exactly where you at right now. So look, we're going to get back to the episode. But before we go ahead and finish, press pause, go to that website, go ahead and RSVP for the training. And I'm going to see you soon. Let's get to it.
Like, construction can make or break you as a developer, as an investor. So what I always tell people is it's important to just understand enough about it to be able to protect yourself. Like, understand enough about it to be able to manage it, or at least know if people getting over on you. Understand enough about it to be able to know if the quality is right, because that's going to affect your ARV, that's going to affect your rent price. And that last piece, being able to understand enough to sell it. And what I mean by selling it is, when you're doing real estate, right, you working on this project, you building a 4-unit right here, you putting a lot of money out. You got all these trades, framers, electricians on your site. Person down the street, they doing a 3-unit as well. You could take your people and, provide a service over there, make some money over here while doing your investment over here, because investment get expensive. So making and monetizing, your construction, making money over here, reinvesting it into your project is like that last piece. So you want to be able to manage it, make sure nobody's getting over, control it, the quality, so your ARV and your rent is good. And that last piece, if you want to take it to the next level, is to be able to sell it, because that money you can make off of it can be a lifesaver, because it gets dark when you're doing your real estate investment. So if you could bring in an extra 10 or 20 over here by sending your guys down the street, that could be a game changer as well.
I think that's a good thing you just said. One of the I haven't GC'd a whole lot of projects. I just not what I personally want to do, but I've had some things where it fell on my lap where it's like, oh, this is easy. Like, yo, I need a deck built. Oh yeah, my guys will go build you a deck, make a couple $.
Right.
Oh cool. I don't even got to go see it. They know what they got to do. Yo, listen, I need a bathroom redone. That's it. Oh yeah. Got
Quick
that out.
two bands, quick three bands.
You know what I'm saying? Oh yeah. Hey, look, listen, I need
payment.
floors, new floors put down. Oh yeah. My guys go to little things like that. So what he's saying is powerful because you can come up, you can come up extra $3,000 a month just doing little.
Yeah, no, for sure. And then the one thing I wanted to say too, because it's levels, right? It's levels. When you start looking at like some of the biggest 3,000 units, 1,000 units, 500 units.
They making their money with construction.
A lot of them do something that we call self-performing. So they're performing as a developer, you acquiring properties, financing them, taking them to A to Z, but it doesn't mean you're doing the construction. When you're doing 100 units, 1,000 units, you don't necessarily have to do the construction. A lot of people will hire a construction manager that'll oversee a GC. They're working with architects, but big developers, a lot of them, they do something called, they self-perform. So they'll actually do some of the construction operations too. So they buying it, taking it from A to Z because the developer's a quarterback at that level. But instead of hiring a construction manager, they got their own construction managers that work for them. They self-performing that. Or instead of hiring a GC, they doing their own general contracting. So they're actually quarterbacking all the construction. They self-perform that. And so like a lot of times the bigger you get, the more pieces you control can help you to be able to make the deals work. It's a competitive advantage because you could do those construction pieces and self-perform. It's going to cut your costs, help you to make better projects, move faster. So the bigger players, when you get to those big levels, a lot of them, they self-perform on the construction.
No, that's a fact. One of my friends, which I believe you know him too, he do a lot of development with 50 unit, 100 units, 30 unit, whatever, how many units, whatever you do. And he was telling me how like one big project you're doing, he said they were going to see, don't quote me on it, but somewhere close to like 400,000 or 500,000. Like it was like a 2-year run. Like the project's a big project, but like after everything was said and done, they might profit like 500,000 just in construction.
It's a lot of money.
Because it was a multi-million-dollar project, but like the GC fee was like 400,000, 500,000. I was like, dang, like he said, yeah, for real. You could talk more about this. Not my lane, but he was saying when you get into these developments, you making the real money is not off of once you refinance it, refi, but not from the rents. He said it's from the construction, the density bonuses, and like the credits,
property management.
He said that's where he said you're not really making $1 million off of just collecting the rents from every single person. He said the money, the cash flow from each, he said the refi, the construction management, GC fee, acquisition fee, property management, it's like all these little sectors. So, but you could talk density bonuses.
Yeah, so especially in the affordable housing space too, because affordable housing, you try and build buildings and rent them for low amounts, right? Because you try to make it affordable. So a lot of times the government comes in and helps, gives a bunch of tax credits, grants, and stuff to make that happen. But you don't make all your money off of the cash flow in an affordable housing deal, 100-unit building. You make a lot of your money off of the developer fee, which is like being the quarterback, getting it from A to Z. The developer fee. You're going to make money from, you're the quarterback. You're the one that's the visionary that's going to help take it from beginning all the way to the end, leased up, rent it. So you might get 10 to 15% of a $20 million project. You're talking about $1 million developer fees, $2 million developer fees. But then you also want to make money off of the construction. A lot of players will make money off of the construction. Extra 300, 500, 600 there. Then people will take and make money off the property management. So in affordable housing, it's a little bit different. Like it's a volume game. You're going to make money off of a bunch of different places and then you're going to rinse and repeat and keep doing.
So I want to stay on this. So when it comes into the affordable housing, which you're an expert at when it comes to the affordable housing, a lot of people think affordable housing, they automatically think Section 8. That's the first thing that comes to mind. I want you to touch on, one, what made you even switch into that affordable housing lane from 20 years ago, you just doing construction and, buying houses the regular way? What made you switch into the affordable housing thing?
Yeah, so first thing, affordable housing is way more than Section 8, right?
Yeah, everybody thinks it's just Section 8.
Everybody, when they say affordable housing.
Full disclosure, I thought it was just Section 8 too. Until I met him, I thought he blew my mind too. I thought it was just Section 8.
People are like, oh, you do affordable housing? I'm an affordable housing developer. Oh, I do Section 8 too. I'm like, yeah, that's great. But that's one of 25 to 30 programs at any given time that's a part of affordable housing. And that's federal programs and the state programs and the city local programs. So it's a whole bunch of programs in affordable housing. Section 8 is one of the many. It's a really good one. I use it a lot, but it's just one of the many that you can do. So how did I get into affordable housing? So for me, it started off in service. So I had a lot of success in the construction industry. I wound up becoming a licensed master electrician, went to school for carpentry, went to school for construction management. It went from a family business out the trunk of a car to all these awards from my family, then all these awards for me. And I'm traveling the world, traveling the country. Then I started getting into commercial, electric, general construction and commercial space. Like I just kept growing and evolving, getting all these awards, 30 under 30, 40 under 40, person of the year from some of the biggest associations in the country. And these not those awards that you could pay for. Like these those ones that they scout the whole North America and they award you as
like that
person of the year,
whatever that is.
National Kitchen and Bath Association, National Association of Home Builders, which is responsible for 80% of all new construction, residential, $100 billion operation, billions and billions and billions of dollars in development. You know, I won person of the year. I won young professional of the year. I've won project of the year. Like,
that's
so
dope, man. That's
you know, so like, but in this traveling and moving in these rooms, I started getting around some of the biggest, sitting on the boards with some of the biggest, and you know, being involved in all these associations with some of the biggest. And I look around the room and none of us are there. Like, it's like you go in there, I'm the darkest person in there, and like I'm not dark. I'm not dark for real, right? Like I'm caramel, I'm light skinned, whatever you call it, right? But for every single time I'm in, I'm the darkest person in the room. I'm one of the only people that come from the inner city, come from a single mother household, come from, you know, poverty situations, come from incarceration situations. And I'm just looking around the room, and I'm like, everybody in here is getting all this money. Everybody in here is having all this success, fancy black tie, black gala, $1,000 plates, luxury hotel. None of us are there. None of us in these rooms. And I just saw the major problem with that. So I started training programs to teach construction and trade, but teach it from like high level, teaching not only how we work with our hands, how we work with our minds, and how do we get into those rooms? How do we have our own tables in those rooms? You know what I mean? And so it started with serving and educating people in construction. Then construction education became how do we serve people with it? Because I'm always looking for ways to give back through things that's helping me. How can I use things that are helping me to help somebody else? So I started doing free repairs for seniors. We started doing repairs for single mothers, veterans, people that needed help. And we was teaching people while doing it. Teaching young people construction and trade, teaching brothers coming home from prison, construction and trade, teaching people that live in the projects, construction and trade, but not just how to work with your hands, how to work with your mind and be a business owner. Because ownership is what this whole thing is about. We servicing people and teaching ownership. So fast forward is like we serving and helping people fix their homes. And eventually an opportunity came to help people own their homes. And so I started doing real estate, more traditional real estate deals. But then I'm working with the government, training people. And they was like, yo, we got these houses for you. We'll sell them to you for $1.
You like,
We'll sell them to you for $1. And you can train people and sell them for home ownership, which is a major problem. Neighborhoods getting gentrified. This was in a section of Philly called Brewery Town, heavily getting gentrified, the community getting pushed out. So we training people, we helping people with home services. Then it was like, well, do y'all want to take these houses, rebuild them, and sell them so that people can afford to live in the community? And we'll give them to you for $1. And then a light bulb went off, like just in the act of service. And in that process, I learned about something called a nominal fee purchase, or a de minimis value purchase, where the government will allow you to purchase a property for a nominal fee, which means way less than what it's worth. as long as you commit to taking that property, whether it's a property, whether it's a piece of land, as long as you commit to taking that and providing affordable housing, whether it's affordable housing that somebody can buy, whether it's affordable housing that somebody can rent, and it has to be sold or rented to somebody that makes under a certain amount of money. As long as you stick to that, you can purchase these properties for a nominal fee, $1, $10, $1,000, but for way less than what it's worth. I got properties for $1 that as is value was $100,000. I got properties for $10 that the as is value is $80,000. I've gotten lots of land for $1,000 that the value is $60,000. And I'm not talking about one at a time. I've gotten 20 of them at a time, 10 of them at a time, 30 of them at a time. As long as the commitment is to build them and then turn around and do affordable housing, because the community has a major need. Like, they're not giving us the full disclosure. They're not giving us the houses for $1 because, or $10 or a nominal fee.
Because they like you.
Because they like us. They're not doing it because they want to be our best friend. They're doing it because there's a need. And because of that need, we're helping to solve a problem, partnering with the government to solve a problem. And part of that, making that solution, they'll sell us land for those low numbers to create affordable housing.
That's dope. I'm glad you explained that, because when you hear dollar house, people just hear like whatever. I like how you explain that, the nominal fee. So I have 2 questions for you. One question, they're giving you, let's just say, for example, they give you 20 lots, $100 a piece, right? Is there a time frame that you have to build these by? Because that's a lot of work. Or they like, hey, as long as it's done before you die. Like,
yeah, so typically it's 2 years. Like, typically they want to see you getting something rolling within 2 years.
But not complete, but at least the ball.
At least the construction starting within 2 years is what they want to see. If something, like COVID hit, or sometimes these bigger projects, the funding takes a lot of time. As long as you are just reporting and updating and keeping everybody in the loop, you'll be good. But usually they give you like this 2-year time period. And if you don't get things rolling with them, then you just got to keep updating them.
Okay. The second question I have, you explained something before that was interesting. You were saying, like, and correct me if I'm wrong, I'm going to start it. I want you to really finish it. You were saying, like, you get the house for $1, but then, like, basically how you buy a house and do a whole project, no money out of pocket. You was like, you get the house for $1, a nominal fee $1,000, and you bring in a lender to fund based off the value that as is. Can you explain that?
Yeah. So if you have a property that you acquire for $1, or you have a piece of land you acquire for $10, whatever it is, what you acquired, if it's worth way more than what you purchased it for, I got it for $1, it's worth $100,000, or it's worth $80,000. I then turn around and I go to the lender. I need money for construction. I don't need the money to purchase the property because I purchased it for a nominal fee, but I need money for construction to be able to rehab it or build it. Now, with these lenders, typically when you go to get a construction loan, they'll give you, or you go to get a traditional loan, they'll give you money to purchase the property and rehab the property, right? But they'll say, we want you to put down a portion of that. They're like, yo, you got to put some skin in the game. We're not just going to give you $150,000 and you just don't have to give us anything more. You know what I mean? That's how I usually go, right? So in this instance, though, you're not asking them for money to buy the property. You already got it. You just asking for the construction. Now, usually they would say to you, all right, purchasing construction is $150. We want you to put down 10% of that. So you got to put down $15,000, or we want you to put down 20% of that. You got to put down $30,000. That's your equity. That's your skin in the game. Like, that's your down payment. But in this instance, it's like, no, I don't want to put down 20%. I don't want to put down $30,000 because the house is worth $80,000. So I own this house outright. It's worth $80,000. So I'm putting this house up. I got my skin in the game already. That's my collateral. That's my skin in the game. I'm putting up a house. I'm going to let you put first position lien on that house because that's what happened when you get the loan, right? Yeah. They put a lien on it. You're going to get a lien on something that's worth $80,000. So therefore, I don't want to put down a down payment. I just want you to give me a 100% construction loan with no down payment down. So they're going to be like, all right, cool. Especially because it's affordable housing. They like to be involved in stuff like that. A lot of them like to get behind those programs, those projects, right?
I didn't know that.
And because there's something called CRA, Community Reinvestment Act. And so big banks play this game all the time. There's like a law that started in like 1979. It's a Community Reinvestment Act where banks get scored by how much investment they make into disadvantaged communities, communities of poverty. You know, so they're supposed to be putting loans into the community. And if they don't, they get these CRA scores. And if they don't meet those scores, it winds up slowing down their business. Long story short, they can't do M&A, like purchase other banks. They can't move across state lines. It's like all these things they can't do if they're not keeping that score up.
This the person in the bank told me one time that they have a certain amount of funding that has to go towards community stuff. Like they have to have certain community events. They have to do certain charity or certain grants or certain whatever. They have a pot that they have to spend a year.
Yeah, CRA money. And if they don't make enough investment into the community, their score gets low, and then they can't purchase. Big bank take little bank, but if they don't hit that score, they can't purchase new banks. They can't acquire smaller banks. They can't move across state lines, and it's just bad for like marketing and just like social responsibility. So a lot of them, they always are taking certain projects that look good. Look, we invest in all this money into affordable housing. They stand up on the stage, hold the check. It looks good for their brand. It helps them with CRA. But rewind though, real quick, right? So you get a property for $1. You don't have any down payment money. You don't have to worry about the down payment money because property, you got it for a nominal fee. It's worth $80. So to them, that's your skin in the game. Because that's the whole reason they want the down payment. In case anything go wrong,
you got something involved.
You got something in the game. That's why they make you put the down payment. In this instance, y'all got $80,000 property. I'm going to use that as collateral. They give you the construction loan 100%, right? But usually what happens with construction loans, they reimbursable. Mm-hmm. So like if you never did a construction loan before, usually the bank will say, all right, we're going to give you $100,000 to rehab that property. But you got to put up the first $15,000, $20,000 to start the construction, right? You do the demo, you do the carpentry, you do the windows, you do the roof, and then you call them and say, hey, this work is done, and they'll reimburse you and give you the money back. Mm-hmm. In this instance, though, you might not have the $20,000 to start the construction and then get it back. So you tell them that you either want an advance draw. So an advance draw is like where it's like, I want you to give me the money before I start.
You can demand an advance draw.
You can request an advance draw. You gotta play it the right way though. They are gonna look at your experience levels and stuff like that. Or if they don't want to give you an advance draw, give you some of the construction money before you start, you ask for a cash out. You be like, yo, the property's worth $80,000. I want you to cash me out $20,000 of that when we close and give me the construction money. And they'll take that $20,000 and they'll put it into the loan. So you ask them for that cash out because there's enough equity in there for them to do that. So they'll cash you out $20K, put that into your $100,000 loan, now becomes a $120,000 loan, but the numbers still work as long as you meet the LTV. And now you got $20,000 at the closing table, and you take that and then you start your demo, your framing, your windows, and so you got money to start and rinse and repeat.
Essentially, you can in-house flip a dollar house. So if I get this house for $100, right? But it's worth $100,000. And I call the lender and I'm like, look, listen, I need $100,000 to rehab it so I can sell it for affordable housing numbers $250.
Yeah.
Right. Look, listen, I own this house is $99,900 in equity in it. Look, cash me out. I want to request a cash out of $20,000. So I'm up $20,000 off of a $100 house out the gate.
Right out the gate.
Damn, that's smooth.
As long as you stay under, lenders, most of the time, they want to see that you can purchase the property and rehab the property for 75% of what it's going to be worth when it's done. Right? Yeah. If you could purchase it and rehab it for 70% of what it's going to be worth when it's done at ARV, even better. Or if you could purchase it and rehab it for 65% of what it's going to be worth when it's done, they'll just throw the money at you. They'll just
throw it.
So when you purchase a property for a nominal fee, it's a lot easier to be able to do that because you got it for so low. You only going in 100 on the construction. It's already worth 100 before you even start. So now it's worth 200. So you had a 50% LTV. So it's not a whole lot of risk for them. And they also understand though too that a lot of times when you're doing affordable housing, you're working with government programs. So a lot of times there's buyers already lined up, Section 8, all these other housing initiatives lined up for people to be able to move in and rent. So like it's kind of insulated. They like, all right, we're working with the government. It's a safer bet for them. And worst case, if everything goes wrong, they still got CRA and they still look good in the community.
So it's a win-win-win for them.
It's win-win-win-win-win.
So now I'm playing myself now. Not getting into affordable housing is actually like you doing yourself a disservice.
I mean, listen, affordable housing, there's huge opportunity in it. You can help people and make money. So it's really not much better than that. Does it have, different nuances of things that you got to be considerate of? Yeah. Like you might not make a grand slam on every project, but you're going to have a bunch of consistent doubles and triples.
You got volume.
You're going to have volume. You're going to have government partners. You're going to get access to better loans where you ain't got to put deposits down. You're going to get access to sometimes grants and money that you don't have to pay back to be able to help make it work. Tax credits, money that you don't have to pay back or that you could sell to get money to do your investment. Free donations, cheaper labor. Like it's so many things that you can get to help make it work. But then also at the end of it, you making money and you also helping people. And honestly, even more importantly, you helping people and making money. Like what's better than that?
That's dope. I love stuff like that. So how now I know you talked about like you do the affordable housing and you in Philadelphia, but is affordable housing in other states, other 49 states?
Affordable housing can be done anywhere. And so
I know somebody asking that, thinking like, damn, I'm in Chicago. Can I do this out here?
So I'm in Philly. So in Philly, we got a pretty unique model that we're doing. It's a turn the key program where we're working with the city building.
Turn the key. So we're working with the city. We're acquiring land for nominal fees. We're building and constructing new construction projects. We getting help from the banks, low interest loans to be able to make these deals work. People paying 12 to 14%. We paying 5 to 7%. We get into where people are putting down 20, 30% down on some of these bigger bills. We're putting down 5% on some of these bigger bills. So it's like, it's a model in Philly that's helping us to make this happen. But the best part is on the back end, we're selling these homes. So we're selling the homes for $280,000. That's the max.
But these homes are worth $350,000. $370,000. Now I know a lot of people are sitting here right now saying $280,000, that's not affordable. But wait, so what happens? The government steps in and gives $75,000 of forgivable debt. It's a second position mortgage that you don't have to pay any interest on. They give a buyer $75,000, so now that $280,000 becomes $205,000.
So they only getting a loan, they only paying interest on principal and interest on $205,000.
They're only paying on $205,000. And that $75,000 that they're getting from the city, as long as they live in the house for 15 years, they don't ever have to pay it back.
This is random as hell, but my brain running. This is random as hell. God forbid somebody, house catching on fire or something like that, and the insurance catches them out. Do they catch them out of $205,000 or they catch them out of $280,000?
They're gonna cash them out at the whole $280,000.
But then they gotta cut that $75,000 back. This is a unique situation.
So to be honest with you, I don't know the particulars around if there's like a claim around insurance and a fire. Mm-hmm. I'm gonna look into that.
That was random as hell.
I'm gonna keep it a beam with you. I know what I know. I know what I don't know.
Yeah.
I'm not sure of the exact situation, but I'm confident that appraised value of that $350,000 is gonna be the payout, not the $205,000 that's on a mortgage. They're gonna be insured for the whole total amount and value of the property. Well, so these properties that we selling for $280,000, they worth $350,000, $370,000, but the buyer is getting them for $205,000. Then another grant comes in and they wind up getting it for $195,000. So people are getting homes for $195,000 that are worth $350,000, $370,000. And so we're talking about instant generational wealth. We're talking about
so now
leveling
when they
the playing field.
Kids, they already
you $150K in equity straight out of the gate. So you walk into a brand new construction, 3-bedroom, 2-bathroom house, granite countertops, recessed lights with $150K in equity in it. And so what I'm saying is the long-winded answer to saying like there's different programs. Like in Philly, we got that program. We also have other programs working with the housing authority. They're giving $50,000 buy downs. We working with the state. They're giving buyers $25,000. Like it's all these programs in Pennsylvania. But this is not just in Pennsylvania. This is not just in Philly. This is anywhere. Nationwide right now, there's an affordable housing crisis. We're about 8 million homes short right now throughout the U.S. People can't afford to live. People can't afford to rent. We literally got people experiencing mass levels of homelessness. We got people that are trying to get crafty moving back home with their parents. We got people that are sleeping in cars. Like it's a major problem. Like this is a nationwide problem. So every single state, every single city is running similar type of programming where they're working with private developers to be able to purchase land for nominal fees, those low numbers, to build affordable housing. Because it's such a big problem that the government can't do it on their own. They trying to solve this major problem. Government, listen, shout out to the government, right? They doing their thing. They building a lot of houses. They're putting a lot of programs in place, but they're very big. They're slow. It's a lot of red tape. So the reason why they come to Boone or they come to JP and say, hey, we'll sell you these properties and we'll form a public-private partnership with you to build affordable housing. The reason they're going to give it to us to get involved is because they need us.
Yeah.
We helping to solve the problem. And that's not just in Philly.
That's flip the script.
That's everywhere. Right now, there's a huge crisis with affordability. Anytime somebody is using more than 30% of their income for housing costs, mortgage and utility, rent and utility, their cost burden. They're in a position to where, like, you know how it is, 33.
You on one foot on a banana peel, one on a sheet of ice.
The moment you start spending more than 30%, 33%, you don't have enough money for your daily other expenses, to be able to survive. And so the problem is right now, people are spending 40%, 50%, 60% of their income on just housing and utility alone. So like Americans are struggling right now to be able to make ends meet, to be able to pay their rent or pay their mortgage and then still be able to survive. So this is like a nationwide problem. But the crazy part about it is this is not even just a U.S. thing. All in the Caribbean, same problems right now. I was just in Ghana, back in earlier in the year. Huge problem with affordable housing.
Hey, so I know you're enjoying the episode so far, and you're probably hearing some of the plays, but you might be like, my credit isn't there. I don't have the best credit. I may not be able to run some of the plays they're saying. So what I want to do is I want to give you an opportunity for free credit repair. I said it, 100% free credit repair. I'm going to drop the website below where you can go ahead and get your credit repaired for free. All you have to do is have the credit monitoring software so that way you can pull your reports and this will be fixed for free. All you have to do is go to nochargecreditrepair.com. It is 100% free. All you have to do is have the credit monitoring software so you can actually pull the report and actually see what the score is on all three bureaus. And then this system is going to fix your credit for free. So again, nochargecreditrepair.com, and you guys can get access to that. Look, there is no reason why you can't win. This is the link for you to get your credit repaired. You're watching a podcast episode where it's showing you how to make money, how to get funded. There's no reason why you can't win. So go ahead and click the link, pause this episode, go ahead and sign up, and then get back to the episode and keep learning, keep winning, keep growing. Let's get it.
Issues in West Africa and in Ghana. They partnering.
And there's no loans out there. You got to straight grab those houses.
Bro, it's a whole nother process. So like, this isn't even just a U.S. thing. This is a nationwide thing, but this is also an international thing. This can be done anywhere, and government's looking to work with developers to do this anywhere.
Yo, this is probably another sidebar conversation, but I just thought about something because I'm really genuinely interested in this stuff. Like, you know how in Midwest, some of these houses be like 50 grand, 60 grand, but they like be almost moving ready. Like, how would affordable housing work out there if the house is already 50,000? But like my one buddy, Doug. Yeah. Doug went out there and he went and bought a bunch of houses like 50 grand, 60 grand, whatever, but they can still rent for $1,200 and stuff like that. How does that's kind of already affordable, or am I thinking different?
Nah, so when you're doing properties like in Philly, for instance, right, we can build the property and it still be worth more than what we built it for, right? So the numbers kind of work by themselves without a whole lot of help from the government. Yeah. When you go to the Midwest, just building a new construction property going to cost you more than 50 grand, right?
Hell yeah.
So it's like, so how do you build affordable housing when it's going to cost you more?
Like the Ohio problem we having.
Yeah, so like if houses only selling for 50, you can't buy a piece of land and build for less than 50, right? So in those type of areas, the government steps in with subsidy. Like, because it's going to cost you more to build it than the house is even going to be worth when it's done. So what happens in those areas is the government comes with subsidy. So the situations where the government will say, we know you're going to lose money on building this property for affordable housing. So what we're going to do is they're going to take it a step further, not just give you the property for a nominal fee. They also going to give you some additional money, $50,000, $100,000 per unit that you build. That they're going to say, okay, we know that you are solving this problem and you're going to lose money in the process, but we need affordable housing. So you could get grants that'll cover that loss. You could get tax credits that you could sell that'll cover that loss, so that you as a builder can build it for whatever it costs. Even though you technically losing money, the grant steps in and covers that loss, or the tax credit step in and cover that loss. But it's needed in the markets where those houses don't have a lot of value. Affordable housing, it could still be done. You get the property for the low, but now you also get the government to give you a grant or give you some sort of tax credit to be able to make sure you make money and the person buying it still gets it for that cheap price.
I'm glad I brought that up, because there's some people in here that might be not, 9 times in, a lot of people that watch this aren't always in Philly. So you might be in Midwest or in different areas where, you know, you think that it's just dead for you. Now, affordable housing can, you know, start your real estate, you know, dream. So another thing I want to ask you, right, when it comes into, you know, the affordable housing and things, like, now people are interested. They're like, yo, X, Y, and Z. Like, is there like websites people go to find dollar houses, or like, is like, how does that next step even work?
Yeah, so I mean, the top 2 plays, look, or the top 2 sources. I could be here all day trying to give you all of them, right?
Well, just like
but
one.
The top one I would give would be working with land banks. So my
homie in Chicago, he messed with land banks heavy.
Land banks, some places call them redevelopment authorities. So if you don't have a land bank, look for a redevelopment authority. Some places don't have redevelopment authorities, they call them repositories. But what these entities do, their government are usually like half and half government and private. They take things from tax sales, foreclosures, city land, and they put it all in this bank, land bank, right? They pull it all together. And their responsibility is to take that land and put it back into the community for public use, for public benefit. You know, community development, business development, and affordable housing. Mm-hmm. Like, they solve problems with this land. So they're not just there to just keep it, they selling it to solve problems. Mm-hmm. And so one of the number one problems that we have right now is affordable housing crisis. So a lot of these land banks are selling land for de minimis value, nominal fees, so that you can acquire them as long as you commit to building affordable housing with a deed restriction, meaning they're going to put it on a deed, make sure you sell it or rent it and do what you say.
Under a certain number.
So you're going to rent it to somebody that makes under a certain amount, or you're going to sell it to somebody that makes under a certain amount. As long as you do that, they'll sell you the properties for the low. And once you get those properties, you could then go and get additional grants from your state agencies, from the federal agencies, and make it all work.
And you in a system as like a partner now. So
it's a partnership. We call it a public-private partnership, a PPP. But this is the good PPP though. It's not that it's not that bad PPP that got some of y'all.
But they got some of y'all. I'm thinking long term. I'm thinking long term, because it's like, dang, I'm in a partnership with the government. I'm in their system now. Long term, I might need other things, but now you in the positive, and like a bank, like, hey, you got a lot of deposits. You got a checking account. You got direct deposits. You know, you paid off a couple loans. So now when I need y'all for a bigger loan, it's like, oh yeah, you good money.
Yeah, when you're partnering with the government, access to capital, loans, things like that become a lot easier. That's the thing about affordable housing. Like, people are paying 10 to 14% of interest on hard money. I'm paying 4 to 6% on average. You know, sometimes we're getting 0 interest loans on some of this stuff. You know, so it's like people are putting down payments, 20, 30% on some of these bigger deals. I got deals I'm putting down 1%, because affordable housing is needed, and these lenders that want to work on it, 1 to 5% on average is what I'm putting down to make these deals work, because it's affordable housing, because it's solving problems and helping people with a greater need.
You know, for me, I never got into affordable housing, and I really, like, the more I talk to you, I get more interested in it. You know, I just got to execute on it more. But like, for me, I come into situations like you where I'm not putting down a whole bunch down, because like that 65% thing, or I'm just finding, like, the way I make real estate work for me, I find like the one I just showed you, I find like crazy good deals. But that's the only way it works for me. But I'm just thinking, like, if I mix some of that mixed in with this, it's like, because that's literally the only way I win in real estate. Because I'm finding some crap that's like, how the hell you even get it that cheap? You know what I mean? Somebody just like, I just need money. I just need to get rid of this. But like, you're getting stuff as cheap, but without having to go through and literally nail and tooth comb trying to find somebody under a rock. I'm finding like 1 in a million type of people that just need help. You're like working with the government where they just giving you the help already.
Yeah, I mean, and it's a skill. Like, don't get me wrong, you got to learn the ropes, and the same way you had to learn how to find those properties, the same way you have to do this. But a lot of what we doing here and what these type of conversations are about is making sure that like more of us know how to do it. Because I'm gonna keep it a beam with y'all. This is not a new thing. This has been going on for decades. And
like longer than that.
This is not this thing like people like, oh, back in the day they used to let my mom and my dad purchase homes for $1.
Yeah, my grandpa did that.
This is a different program. Like, that was a real thing, but this is a different program. They've been selling properties to developers to help solve the affordable housing issue for nominal fees, $1, $10, $1,000 for a long time. And these properties are worth way more than those prices that they're getting purchased from. This isn't a new thing. But what's new is these conversations in our rooms about it. What's new is,
to this day, I still don't hear nobody else talk about it but you.
Community starting to catch wind, getting involved. But the next step is setting us up to be able to navigate the process. Like, it's one thing to know, it's another thing to know how to execute, implement, and do. You know what I mean? So like, these type of conversations is raising the awareness. The next step is to make sure that we get more involved, because at the end of the day, a lot of this affordable housing need and this crisis is in our communities. Like, we are the end user of these properties. We're getting sold them as affordable housing, getting rented to them as affordable housing. It's a beautiful thing. But my whole thing is like, how do we get off of that, just on that side of being the end user, and we get on the capital side? We get on the commerce, the business side, where the billions are being made, because right now there's billions of dollars floating through affordable housing credits, programs in every single state, billions of dollars right now. But we not at the table. It's a lot of people that don't look like us, don't come from situations like us. And this isn't to take anything away from them, but it's like, that's a lot of money that's not coming through our communities, that's not coming through, our economies, our ecosystems, right? So a lot of this is making sure that we know about it, but then we know how to do it.
We the end user, and they getting points off the end user. We should be positioning ourselves to where we could be the end user, but also the front end, and get points off the same thing, like
vertically integrated. Like, we solving our own, we solving our own problems, right? We leading it from the front. So like, when we talk about the buy back the block movement and community that we have, like, it's about us leading from the front, being the change that we want to see, right? So we're gonna source and work directly with the governments on the public-private partnerships. We're gonna fund them, knocking down all the barriers that's kept us back from being able to finance these type of projects in the past. We're going to deliver quality product, and we're going to sell it or rent it to somebody that's in need, give them a major amount of equity, a beautiful place to live, and make money in the process that comes back into the communities, that comes back into our family members. So it's like a win-win for everybody.
It's funny, right? I'm glad you mentioned, the buy back the block, what you have going on. You the only person I know that talk about affordable housing outside of Section 8. Everybody's Section 8 investor. Everybody, I'm sure the Section 8 model. But you're the only person I know on this planet that talks about affordable housing, but not only just talks about it, actually helps people get involved. Like, I've literally, when I was at the closing with you last time, you and the other gentleman, y'all bought like $2 houses. Like,
shout out to Musa.
Yo, Musa. Yeah. I'm literally at the closing. I think I had to meet you for something else, and you was like, yo, just meet me at the closing. Listen, I can't make this stuff up. I'm literally at the closing. I don't get shocked by too many things. I'm at the closing, and we do what we had to do. And I get there, and I'm just, let me look at this sheet. The crap said $1 on 2 separate sheets. Like, he bought 2 houses for $1. And then I remember But the craziest part, though, hold up. Those 2 houses that we got for $2, one of them was worth like $120,000. Damn.
The other one as is was worth like $130,000.
Damn. And so $250 in
for $2
in real estate for $2.
Listen, I got a contract in my car right now for 10 houses and I'm getting 10 pieces of land that I'm getting for $10,000, $1,000 a piece. The total value of that land is $600,000. I'm paying $10K
for the land before the development.
Land before the development. I got the contract sitting on my backseat of my car right now. I'm paying $10,000.
You know he getting too many dollars in the backseat.
Listen, I should have brought it in there.
Seat.
I'm paying $10,000 for land that's worth $600,000. We're gonna build new construction, affordable housing.
Imagine
in West Philly.
Imagine the equity cash out you pulling just to get started. There's no reason why you should put any money down. Like,
not only do we not put money down, we also take it and leverage it. I got 28 homes for $28 in the city's brewery town section with a value. I paid $28. It's worth $2.8 million. I paid $28 for something worth $2.8 million. Yo. And listen, if I'm lying, I'm dying. If you've been on the webinar, you've seen the addresses. Like, this is a real thing because we helping to solve a problem.
That's crazy.
And what we did was we took that $2.8 million worth of properties and we turned around and got a business line of credit against them for $980K. And then took the $980K and ran in construction and just running them 5-6 properties at a time, rinse and repeat. And we making money.
Taking affordable housing and
we
flipping
money.
it 30 different ways.
We making money. We helping people. You know, people getting warm, safe, quality homes at the end. And the people that are leading it, all of us as contractors, all of our subs is from the community. So it's like, 360.
Yo, I ain't even think about that. Yo, so you got your Buy Back the Block movement. You helping people out. Like the guy Musa, you help Musa out. I seen you help this one other lady out. I think she was like a doctor, a lawyer. She went ahead and got into development.
We got Yolanda, we got Sarah, we got Antonio. Listen, right now, mentees got
the one guy was like a camera guy or something like that.
We got people, cameramen, brothers is coming home. Like, this isn't just unique to one specific type of person. It's for anybody and everybody that has a passion for real estate and has a passion for giving back to the community in the process and making money, building legacy for yourself and for your family in the process too.
That's lit.
This for everybody.
That's lit, man. Yo, so how can someone be a Musa or a Sarah, or do you have something that people can tap into so they can? Because I know you gave a lot of game on this, but I'm gonna be honest, you have to watch this 3 times and you still had to call him. So how can someone tap into you to really get started, like to really, really get started in this affordable housing stuff?
Yeah, so we have a education training that's coming up. It's gonna be a 5-day training. It's all about covering everything from the beginning of how you get into affordable housing, source affordable housing, fund affordable housing, build single family properties and even multifamily properties, and work with the government to sell them and run them on the back end, all while being successful as a starting developer. It don't matter if it's your 3rd, 5th deal developer, 10th, 9th deal developer. We got some opportunities for people to start anywhere you are. And so this is going to be through our Buy Back the Block Challenge. It's going to be coming up on November 14th. We're going to be launching, or the week of November 14th, we're going to be launching it. It's going to be 5 days of training. Plus, we're going to have some bonus resources and probably a bonus day or 2 with some special guest speakers that's going to be coming in there. But by the end of it, you'll have a sound grasp on everything that I'm talking about. If it's not making full sense to you right now, by the time you complete that, you're going to be in a position to be able to execute and run the play, because this isn't just about education just to be educating people, right? Education and knowledge without execution it's a plaque on the wall, right? Like, we try to turn this into something that's tangible, something that's legacy, something that's for you, for your family, for your loved ones, that's going to be there for generations to come and be there for the generations to come of the people that you serve. And so this is real stuff. And by the end of it, we always make sure that everybody's in a position to be able to execute and get into it.
That's lit, yo. So make sure you guys go to Buy Back the Block Challenge.
BuyBackTheBlockChallenge.com.
Make sure you guys go to BuyBackTheBlockChallenge.com. Make sure you tap in with him. I've seen it with my own eyes. Like, I've literally seen, I was at the closing when we did it. Well, y'all already know I only bring on people that I've seen it with my own eyes and it's fully stamped. But I'm at the closing, y'all. I can't believe it. Like, it literally said $1. Like, when you hear dollars, you like, it might be like $1, some change, or like $2, it might be $100. It really said money sign 1. And then it hit it on another paper. I'm like, yo, this is crazy.
And the other one we hear a lot too, people always say, oh, you're going to get it for $1, but it's going to be a bando that's falling to the ground, that's not even worth $1. It doesn't work like that. You get access to opportunities that have a lot of value straight out of the gate for a nominal fee, as long as you're building affordable housing. Like I've heard about the stories in Baltimore. People are like, oh, in Baltimore, the houses all falling down.
They just got a front, no back.
That's one small example of what's going on in this world of affordable housing.
That's social media, man. It's just like
how it go.
Yo, but before we close, I just thought about, my mind just kind of be running. So you said affordable house when it comes to multifamily. So like, dang, you could get a dollar house that's zoned RM1 and then turn it into like a duplex or triplex, but it was originally a dollar house that was awarded to you.
You can get a purchase a property.
Like they not only single family houses, these is multifamily.
You can purchase properties for nominal fees and turn around and do 20 units, 50 units, 100 units. I'm just wrapping up a project where I had, a small piece, about 20% piece, on a 42 unit project. That was a public-private partnership, $20 million project. And
$20 million project, like 20 points.
Well, listen though, like it's
government, my partner,
But listen though, because it's a lot of opportunity for collaboration like that, right? But it's not just houses. You got new construction, single families, multifamilies.
That's why I wasn't sure.
Small, big, medium. I was just with one of my guys the other day, just breaking ground on 51 units. You know what I mean?
So you posed that,
yeah. So like it's limitless in what you can do with these pieces of land or these properties, as long as you solving a problem. And at the end, you either renting or selling affordable housing.
I like that. So make sure you just drop your Instagram and then buy back the block challenge. So you guys, I'm gonna be 100% honest with y'all. Like if you are someone that's in real estate already or you're aspiring in real estate, you should definitely like join this and be a part of this, because information changes situation. And you may be in a situation where you may be having trouble finding deals or trouble trying to get the ball started, or you may be in a city where it's just hard for you to like really get some rhythm. You might have did a deal or two, but it's hard for you to really get some rhythm. Like it may be time for you to pivot and try a new strategy. And this may be a sign to try this type of strategy. Like really, really, really be honest with you. Like, yo, if you're having trouble like getting really like taking off, like it's probably because the strategy that you're doing isn't really giving you the results that you want. And you at some point you had to just stop banging your head like, you know what, not quit real estate, but pivot the strategy you're doing. And I think some people make the mistakes and say like, yo, I had a bad deal, I'm quitting real estate. No, don't quit real estate. Figure out a different strategy. Still stay in it, but figure out a different strategy. Like me personally, I've done multiple different strategies in real estate until I figure out like, this is the angle I like. And there's nothing wrong with that. You pivoted, you tried different things. So it's not, but once you find the one that works, and you have to give it a shot. You know what I mean? So buybacktheblockchallenge.com. Definitely give them a shot. And you can drop your Instagram.
Yeah, so it's j.p.ferrini. All
you
gotta do is just put that j.p.
And
then once you get the F-E-R, it's gonna pop up. It's F-E-R-R-A-R-I-N-I, but you're gonna put that J, that .p. .fe is gonna pop up.
One time I was typing your name.
You're gonna see me right there.
Last name, I was like, I don't think this is right. I don't think this is right. But yo, bro, I appreciate you for being on here. I appreciate you for being a good person to me and sharing a lot of value to me. And that's me being 100% honest. Like you really, really care a lot about the people and not just about the people, but what you put out there in the world. And that's rare. Like a lot of people like, yo, listen, just put this out there. Down to information, down to houses. Yo, and you slap some laminate floor in there. Tell them to go about their day. You're like, yo, just mix the knob and tube with this. Like, you like, no, this stuff got to be right. If I'm putting it out there, if I'm putting my name on it, it has to be right. And I think that really needs to be highlighted. And then just always being available to answer questions and just help. Like, yo, listen, I literally was analyzing the deal before we press play record on this, and he helped me out. And I literally texted the seller and said, I'm going to move forward on the deal off the strength of him. There's no BS. Off the strength of him saying it's a go, I'm not even questioning it. It's a go. So make sure you guys tap in j.p.ferrini, just to F-E-R, whatever.
F-E-R-R is going to pop up, man. And just in closing, man, we give this information away so that we can keep it, right? We got to be good stewards of the blessings that we have, right? Like that's being a good steward, you're being responsible with your blessings by helping others with them, right? And I just want everybody to just lock in and rolling out 2025 all the way into 2026. Just remembering that what somebody else accomplishes doesn't make what you're doing any less, right? And in fact, the people that you build up around you are going to be your greatest allies. And you're only as strong as the individuals that stand to the right of you, that stand to the left of you, because God forbid you fall on hard times. God forbid you have a down period. God forbid somebody comes creeping up behind you. You want somebody to the right of you, to the left of you that's strong, that can hold you up. So what we're doing here is we're sharing the blessing so that we can keep it, man. So I always appreciate platforms like this to be able to come here and share.
Thank you, bro. Appreciate you.
Yeah, no problem.